Coming up today, stocks continue to rise, more buy signals form. What caused robotics stocks to rip today? The latest from Jensen Huang on Joe Rogan. Crypto continues to bounce back. SEC gets behind IPOs. The latest economic forecast and the monumental changes taking place in markets right now. Can you feel it, guys? Let's go. And welcome back, guys, on a rather bullish day in the markets again. This time with a little bit of a rotation out of mega cap tech stocks, led lower by Microsoft, but not all was lost. Google and Tesla finishing the day higher, along with many other sectors, especially the Russell 2000 small caps having a great day, leading the charge higher, up 1.82%, well above the Nasdaq and the S&P 500, just barely eking out a gain there today. And we're continuing to see a good bounce in crypto. Bitcoin briefly touching $94,000 a coin today, further increasing the chances that we did see a low late last month on peak fear. Stick with me today because I'll come back to this later, along with the latest development going on in the crypto space. We've got some pretty big stuff happening out there that I'm going to share with you. But first off, let's just take a look at a few other things. Fear and greed index just barely making it back into the fear zone after being stuck in extreme fear for a few weeks. We'll get the latest AAII investor sentiment survey tomorrow. I'm expecting that to come in a little bit more bullish than what we've seen the last few weeks. We really saw the bears come out of hibernation on elevated fear, not only in crypto, but in small cap growth and other high beta momentum sectors that we've seen of late. As always, nothing changes people's minds like price action, but I still think there'll be more bears than bulls. So come back to the channel tomorrow and we'll check on that. And this chart here really shows the divergence between what the actual economic data is printing and people's opinions, expectations, and feelings, basically at rock bottom lows. And that's economic soft data, which is made up of surveys, sentiment, and how people are feeling, versus economic hard data, the actual growth in the economy, consumer spending, and the like, which is continuing to trend up. And we'll touch a bit more on that later on as well. As believe it or not, American stocks are still on track for their second worst year ever relative to the rest of the world and their stock market, which funny enough kicked off right after Trump was inaugurated into office on the 20th of January. American stocks significantly underperformed and have barely bounced back, basically consolidating against the rest of the world, looking at this relative value chart of the S&P 500 versus the Vanguard World Stock Index, excluding the United States. A lot of big and small investors not buying into the whole golden age story of America. Will they turn out to be right, or will they be left on the sidelines? Time will tell, that's for sure, especially going into next year, as the technical picture continues to improve. In fact, we've just hit a bit of a peak with a percent of stocks now triggering an MACD buy signal. That's a technical indicator. And since we've just had a pullback and stocks are swinging back, that triggers these buy signals, which, looking back in history, is quite bullish for the market. Whenever we get more than 30% of stocks triggering a MACD buy signal, we can often see the market going for a run for quite a few months or longer. And one sector that was really lighting up today that I'm super excited about next year, as my regular viewers know, I've been talking about this all year, and that's robotics. The Trump admin making a big push into AI now, doing the same thing with robotics, signaling it as a national priority. Commerce level officials have already begun meeting with robotics companies, and a formal push, possibly via an executive order early next year, currently being floated to accelerate US robotics development. The argument's pretty straightforward. If America wants to reshore manufacturing and compete with rivals like China, which already deploys millions of industrial robots, then ramping up robotics at scale is no longer optional, it's essential. So no surprise to hear from Commerce Secretary Howard Lutnick today, they're going all in on accelerating development, because nothing motivates better than good competition, in addition to being highly doubted. And there is good competition with China, who are also all in on robotics. And in fact, on some measures like use case, they already lead the world. 2 million and counting factory robots China currently uses, more than the rest of the world combined. And similar to AI, this is a race America and the West cannot afford to lose. So for investors, this shift isn't just political bluster. It could mark the beginning of a multi-year boom in demand, funding, political and regulatory tailwinds, and the real deployment of industrial and advanced robots. Companies that build, design, program, or supply robotics hardware are now suddenly squarely in the crosshairs of federal support, funding, tax incentive, favorable regulation, and a push to make America competitive again. These companies are not only ripping high today, but this could just be the start of a multi-year trend. And I believe we've got a huge structural tailwind now, especially in a domain as capital intensive and globally strategic as robotics, with Tesla leading the charge as they slowly but surely transform from an electric vehicle company to a robotics company, not just robotic cars, but also humanoids. So expect the government pull out all the stops, anything that's needed to accelerate these companies and win this important race with China. And even though China currently has more robots in use, certainly developing as fast as they can, Tesla is still the leading humanoid. Incredible progress just in the last couple of years, with Optimus going from barely being able to walk to now easily running. Big advancements in the dexterity of its hands, which is key to its development. No surprise to see the market act favorably to this news today. Stock clearly outperforming the rest. Omega Cap Tech up 4%, along with a big rip in the entire robotics sector. Looking at my themes watch list here, getting some monster moves out there today. Some of the smaller speculative names like Rich Tech Robotics, which I'm still holding long, as they've already got almost 500 robots in operation across the states today. In my opinion, the best pure play, high beta name leverage to the robotics thing. And so with massive government support, that really turns barriers into tailwinds going forward. So I'm super excited for this sector next year and beyond. I think we're just at the very beginning of the next evolution of artificial intelligence into the physical world, which is a super exciting time for us investors. But it's not just robotics America's looking to get a leg up in, it's also shipbuilding. Again, China well out in front. And that's the cool thing about AI is it's unlocking huge productivity gains. No longer is it the economies with the cheapest cost of labor that have the manufacturing advantage, but going forward, it's going to be those with the best AI. And of course, that needs the full support and backing of the government to truly unlock that potential, as it's not just for factories and warehouses, but also a matter of national security and defense, where robotics and shipbuilding will play a key role. We just heard from Anduril founder Palmer Luckey make an interesting comment today. He's working on prototypes that move through the crust of the earth, including potential plans for a golden dome, similar to Israel's Iron Dome, best defense system in the world, which will be a big boon for defense spending. And if it makes America impenetrable, that's a huge advantage and leverage on the global field. And many investors, myself included, are looking forward to Anduril listing on the stock market. It's going to be one of the hottest IPOs once it comes on board. And even though we're seeing geopolitical tensions dial down, we're still going to see big defense spend, as the Golden Dome may actually cost up to $200 billion, which will be a big trough to feed from. And so AI advancing at light speed is helping all this stuff, advanced manufacturing. As like every new technology, the cost of it falls very quickly. It's always expensive at first. Just like we've seen in AI the last couple of years, even though it's been barely 3 years since GPT came onto the scene, costs are already falling significantly, some cases 90% or more. At the same time, what AI models can do is doubling every 7 months. We've seen that with Gemini this year, a huge advance. A lot of people still think AI is just a chatbot. They don't realize how much it's completely revolutionizing entire industries and businesses, slowly replacing all the tasks that humans do, as it's the fastest new technology to ever approach mass adoption. Quicker than the smartphone, quicker than the cell phone, quicker than the internet, even the microwave. And it was interesting to hear from the leader of this AI revolution, NVIDIA CEO Jensen Huang, on Joe Rogan today, not only pushing back on the vitriol against President Trump, as that helps nobody except China, but also making the important point that we really need to see a pro-growth energy policy for AI and robotics to flourish. It's the layer one of the whole AI revolution, for which there's already currently a shortage that is set to grow. The demand-supply dynamics of electricity and the data centers and GPUs that they power is actually lacking, and that's the biggest difference between now and the internet boom of the 90s, when they built way too much capacity, which wasn't able to generate a return on capital. And so that's the big bull case for uranium, the most powerful source of energy, nothing more efficient than nuclear. And of course, there's still small and highly speculative companies at the forefront of new age nuclear technology, small modular reactors. And like I've been saying, these high beta stocks and sectors have had monster pullbacks of late. Just looking at one of the most notable companies in this space, NuScale Power. Just from 6 weeks ago, the stock has pulled back 70% in a month and a half. No doubt washed out many investors, but like I say, just because we've got a raging bull market doesn't mean we're not going to see significant bouts of volatility. That's a feature, not a bug of the bull market. We saw the same thing in the late 90s, significant bouts of volatility on the way up to the top in March 2000. But we've already been seeing mega cap tech partner with these companies, making investments towards small modular reactors a lot quicker to get them up and running than traditional nuclear power plants. And now we can expect more and more government funding and involvement as well. So I think these stocks could be setting up for a big bounce back next year. But just moving on to crypto, continuing to see a nice bounce in Bitcoin here today, along with Ethereum, as I don't think a lot of people realize what a monumental moment this is. The world's second largest asset manager, and by some measures the largest when it comes to retirement funds, financial advisors and the like, Vanguard, opening the doors to their 70 million clients to buy crypto ETFs. That's not just a positive change for sentiment, but actual buying in the market. The company has almost 12 trillion in assets under management. We also saw Bank of America recommend their clients allocate 4% to crypto. We've got the world's largest asset manager and its CEO doing the rounds on interviews and podcasts saying tokenization is the future, coming out today and saying US national debt will accelerate crypto adoption, as worries continue to build not only over America's, but a lot of developed countries' fiscal situation and their debt. The market really loses trust. That could accelerate the move to digital assets and a whole new way of how currency and the financial world and transactions operate. As we just heard from Coinbase CEO today, he's currently working with several of the world's largest banks, partnering with him on pilot programs focusing on crypto integration. And again today, from one of America's largest wealth managers, Charles Schwab, also planning to open the floodgates to their clients in crypto early next year. And so it's funny how this has all played out, hasn't it? Crypto market absolutely dumped, complete washout, the highest amount of liquidations and elevated fear we've ever seen. And all of a sudden, Vanguard, Bank of America, Charles Schwab, Goldman Sachs, BlackRock, all pushing crypto to their clients in the same week, which is basically a massive shift in the matrix, practically overnight, or a happy little coincidence, whatever you want to call it. Given the massive disconnect between the fundamentals going up and the technical, that divergence has never been more extreme than anything we've ever seen in crypto. And it goes beyond Wall Street adoption. We could be actually witnessing the start of a monetary rebellion unfolding in real time after decades of fiscal mismanagement, unsustainable debt loads, currency debasement, just pushing more and more people towards fixed currencies like crypto. And Bitcoin could actually emerge as the pristine collateral layer of the digital economy, as it's globally transferable and immune to political manipulation. And if Bitcoin is the collateral layer, then Ethereum is rapidly becoming the global settlement layer, a decentralized computer that executes financial agreements without needing banks, clearinghouses, middlemen, governments. Everything from derivatives to payments to identity now settle seamlessly, trustworthy, 24/7, in real time, without permission, and real-world assets can be tokenized. The result, a parallel financial system that is faster, more transparent, and more secure than the one we inherited. And those are the big fundamentals taking place, like I said, after we've had a big technical washout. Seeing a good bounce here today. Along with a few other sectors in the market, many of the hot themes have been knocked down. Some of them have been already bouncing back a little, showing their feet, but not all. Like I just showed you with NewScale Power, still trying to find support after a monster pullback. And same with a lot of high beta sectors and stocks out there. You can see that in the meme ETF and other names like Rocket Lab, which may have found support again after these big pullbacks, 50% there on Rocket Lab. Similar story for AST Space Mobile and Quantum as well. Looking like they're finding support, but we still haven't seen that big face ripper, monster green candle, volume thrust, clean out the shorts, put in undeniable bottom and push back above moving averages. It could be on the cusp of that. Certainly positive signs there today. A lot of these sectors and stocks finding support, but we still can't quite call definitive bottoms across them all just yet. Still potential for retests, but we are coming up bullish seasonal periods. Like I said, the fundamentals for the market are good next year. Fiscal stimulus, lower rates, full support from the government, but there's still a long ways to go before these risk-sensitive sectors break out to new all-time highs, like the IPO sector, private companies coming onto the market. Could be setting up for a good 2026. Certainly lower rates helps. Again, with support from the government and deregulation. We just heard from the SEC today. They're looking to grow IPOs by shrinking disclosures, the red tape and barriers private companies must jump over is actually increased over the last 10-20 years, which has probably had an effect on why the amount of companies listed on the market has gone down significantly that time. But there's no shortage of hot private companies out there that could come onto the market in the next couple of years. GPT Maker, OpenAI, SpaceX, Stripe, Databricks, Anduril, Anthropic. These are all American companies here in the blue. China in the red, just a couple there from Europe, as they're still drowning in overbearing governments with heavy regulation and taxation, stifling innovation. Just moving on to the latest economic print we got today. A little bit of weakness in the jobs market. Private payrolls unexpectedly falling by 32,000, showing smaller businesses are still having a hard time, even though larger businesses are holding up. Obviously, mega cap tech doing the best, and those leveraged to AI. And that coupled with estimates, PCE inflation this Friday should come in line and relatively tame at 0.22%, according to Goldman Sachs. Along with real-time data of inflation and the economy, tracking just a bit above 2%, should almost certainly give us a rate cut next Wednesday when the Fed meets. The market's certainly pricing that in, and we saw a big flip in these odds not even 2 weeks ago, which really put a floor in the sell-off the market was experiencing. As many Fed members were pushing back on doing a cut, but they can't avoid the weakness in the jobs market, which basically forces them to cut, even though Jay Powell and a few of his mates there have been hesitant all year to try and get out in front of the labor market weakness, as they speculated tariffs were going to cause a lot of inflation, which, as we all know, has not materialized. Now, at the same time, we've got Goldman Sachs boosting their GDP tracking estimate to 3.8%, which is almost like a Goldilocks scenario for the stock market. We've got a little bit of weakness in the labor market, which justifies rate cuts. At the same time, the economy and corporate earnings are actually growing above trend. And wouldn't it just blow the socks off so many people out there if the US economy started trending towards 5% GDP growth next year and into 2027? That is certainly going to give the bears out there a complex to deal with, as we do actually have signs of consumer spending actually breaking out on the upside. Looking at the Red Book Index, as wealthy consumers have never been more wealthy, and they continue to spend that, helping to drive the economy higher. And we can see that in the performance and stock price of America's largest retailer, Walmart, now on its way to $1 trillion market cap for the first time. Recently announcing plans to relist on the NASDAQ, trying to transform itself to a tech stock, really embracing AI, even announcing they don't plan to increase their headcount. I think they're actually planning to decrease it. Over coming years, you're going to see more robots in their warehouses. And I'd say within 5-7 years, probably robots at the checkout as well. Market certainly loves all that. Stock breaking out here looking pretty good, as is the entire retail sector, as we're currently on track for a record holiday spending period. We've seen a big bounce back in retail stocks, these big volume thrusts upward as well. Good technical signals there for the market, along with volatility continuing to drift lower. Just looking at the VIX 9-day index, pretty tame there. Going into PCE on Friday. Options market not too worried about what's around the corner. Same deal with the bond market. Rates drifting a little lower, not forecasting any hot inflation prints anytime soon. But again, for me today, the most notable thing is crypto potentially finding its feet here, starting to catch up to the big indices, just like these high beta sectors and names as well. Potentially finding support this week, looking to close this big gap on the upside instead of the indices closing on the downside. But we still need to see a nice big green candle across the board for those sectors to really call a bottom here. But looking at the Russell 2000 leading small cap index, certainly looks pretty good, pretty much sitting at all-time highs, outperforming the S&P and NASDAQ once again here today. And like I've been saying, I'm super pumped for small caps going into 2026, along with crypto as well. That's all I got for you today. If you haven't already, think about clicking that subscribe button. Certainly helps out the channel, and I hope to see you back here again this time tomorrow. Cheers.